thank you for joining us for our live question and answer session at Adeia's 2022 investor presentation. Our question and answer session will last 30 minutes. For those of you joining us live stream, there is a form to ask questions. Those questions will alternate between the questions from our analysts. To begin, our first question comes from analyst Richard Shannon at Craig-Hallum. Richard?
Great, thank you guys. Maybe two questions, maybe a very simple one here just on the financials. I think you're talking about a goal of driving revenues to 500 million here, and using a 6% CAGR here, that would seem to get to that point within 4 to 5 years. Am I doing the math right, or is there other elements that would change that necessarily?
Sure, Richard, that's a great question, and certainly that's the goal that we've set out is 500 million over the next 5 years. And I think what's important to recognize is that's our annual revenue baseline, which we're currently at 375 for. And so we're focused on really growing that baseline. We think that's a really important metric for us. And so one thing to note, though, is that baseline might not always be a linear growth. It will change over time. Some years we might see really significant growth given the nature of the deals that we do. So we have, not a significant number of deals that we always get done in a year, but often they're really big, and that can really increase the revenue baseline as we go forward in a significant way. And so what you'll see is as we get more confidence in that baseline and we have momentum to really move it up in a meaningful way, we'll do that and we'll report out on that. I don't know, Keith, would you add anything to that?
No, I think that's a really good summary. When you take a look at the numbers and the opportunity for us, it's just very exciting. You heard Mark talk about in terms of what are the opportunities from new media and OTT, and then with Dana, the semiconductor and kind of the reboot and the next generation, if you will. It really gives us really substance to grow that revenue. So you were spot on your math, and that is our goal, right? Ultimately, we have the opportunities to grow. We're going to execute on that, and that $500 million number is really real. We have a great pipeline that will support that.
Thank you, Richard. Our second question is actually from the audience, and the audience asks, what is fundamentally different about how you will approach the market as a separate company, and how does that impact your growth prospects?
Sure, thanks, Jill. I think our strategy will largely be similar to what we are today. We're going to focus on really what we're core at, media and semiconductor business. But we also have an opportunity to really invest in our business as well in a different way, with more focus on growing our patent portfolios, for example. We've set a goal of 10% growth year over year. And we think that growth in our patent portfolio will really drive to revenue growth over the long term, especially as you think about, adjacent markets in the media space, gaming, sports gambling. We've got AR, VR that Mark talked about, metaverse. All of that stuff is really exciting for us as video expands, and those opportunities are there. But we have to invest in the business in order to really focus on that. So our strategy will really focus on what's our core asset, and that's our patent portfolio. And we think we can grow that 10% year over year based on what we've projected in terms of our expense run and everything else. So we're excited about that opportunity.
Thank you. We have another analyst online with our second question, Hamid Khorsand with BWS Financial. Hamid?
Hi. So my first question was going to be, are some of the customers in different semiconductor markets unlicensed because they can bypass your patents, or is it because you have yet to engage with them?
Sure, I'll start with this, and then Dana, you can expand on it. But really, as you think about licensing takes time, right? And so you have engagements with various customers over time that we're at different aspects of the pipeline of where we're at, right? And so there's certain markets where we're also just seeing market adoption, right? We're especially in our hybrid bonding portfolio and in our advanced processing node. Dana, you want to expand on that aspect of it?
Yeah, thank you. As far as the engagements are concerned, we are market focused. Okay, so we do look at, for example, the image sensor market. We do look at the logic market. We do look at the memory market. And I would say that we are actively engaged in discussions with all the major players in each of those spaces. But as Paul alluded to, we're talking about emerging technologies. And people are just at different points in their evaluation of our technology and what they want to do as far as their roadmaps are concerned.
Thank you. We have another question from the audience. The audience asks, having watched both the Xperi and Adeia presentations, it seems that a lot of Adeia's growth opportunities on the media side will involve seeking licenses from actual and potential Xperi partners and customers. Is that a fair assumption?
So, Jill, I don't think that's really a fair assumption in the sense that we really are focused on different aspects of the market. So I'll give pay TV as an example. Most of our pay TV customers are really the tier one, pay TV customers that really have their own, product offerings. And the Xperi product business is more focused on customers that might need their products, right? And so there's that natural bifurcation there. And so we don't see a lot of overlap. Now, where we've had channel conflicts, and one of the key benefits of the separation is allowing Adeia to really kind of expand into markets where there has been those channel conflicts, but they're not really customers of the Xperi product business per se. So we think that this separation really opens up opportunities rather than and takes away those conflicts far more than it would in the sense of it being an area where we continue to have overlap in our customers.
Thank you, Paul. Our next question comes to us from Nicholas Zengler at Stephens. Nicholas?
Yeah, hey guys. I was curious. I don't know if I missed it or not, but I was wondering how we should think about the revenue mix between IP revenue that serves the media segment versus the semiconductor segment, and is there a meaningful difference in the growth outlook if you look at it the two separately?
Sure, Keith, you want to handle this one?
No, great question. If you take a look at our revenue profile today, approximately 90+% of our revenue does come from media, and a little less than 10% from semiconductor. But really, when you take a look at the depth and breadth of our pipeline, it really gives us very similar growth opportunities. Now, what's really exciting is when we get into new media sources, we talked about that having a very accelerated growth rate that will more than exceed the declines that we're going to have in pay TV. So in totality, we see just a really great opportunity in the media side of things. And then Dana, as he pointed out in his presentation, we're really excited about with the emerging technology on the semiconductor side of our goal is ultimately get to be $100 million in revenue. So with that, those are just compelling and just very exciting opportunities. So that mix really is going to have a tremendous effect in bolstering our revenue.
Thank you for the question, Nicholas. Our next question is from the audience. Can you talk more about the motivation for the separation? Why will the two halves be worth more than the whole?
Sure. Great question, Jill. I think one of the core, focuses of this separation, we've been studying this for really years, is that, both businesses are pretty distinct, right? In both their profit margins and growth prospects, and really there's the how we go about licensing even, right? And there's channel conflicts that I mentioned earlier that we have to have taken into account. And so by separating the two businesses, we'll be able to focus on really what's core to us and the investments that we want to make in that business, and that management focus will be able to accelerate our growth. And on the Xperi side, they'll be able to do something similar where their growth will not be measured in the same way as really the Adeia business will. And so we think this management focus will really be able to accelerate growth for both parts of the business. And I think that's really one of the fundamental reasons for this. And so we're super excited about this opportunity and going forward on the Adeia side. And I know my colleagues on the Xperi side feel the same way on their side of the business.
Thank you. Up next, we have Richard Shannon from Craig-Hallum with a question. Richard?
Hi, great. If you don't mind, I'll ask two questions. First, I want to follow up on the prior question about the split of revenues. I think, Keith, you said the answer was about 90% media and 10% semis. given that you said similar growth rates in both those sectors, I would assume that the investment from an R&D perspective is going to be largely that mix, or do you see the inorganic part of the growth coming disproportionately from one or the other?
In terms of allocating those resources, it really depends on some of the opportunities. So we're making some deeper investments on new media to kind of get into some of the green fields that we had talked about earlier. And then with the semiconductor, it's just kind of a layering effect, just to be ahead and really to assist that industry in terms of getting to the deeper technology and the next steps. So in terms of allocation, I don't think it's directly proportional in that regard. It's really us seeking those new opportunities and where we see opportunities to grow, and then making a really committed investment to capitalize on it.
Yeah, I would just add, Richard, that one of the things that is different is Dana noted is we're trying to get into this next chapter of semi, right? And so there is some additional investment that we need there, especially in the hybrid bonding and advanced processing node, that to get to that $100 million revenue goal that we have. And then similarly on the media side, right, we've got a very established business for the most part of it, primarily in pay TV, but also in OTT, and we've had some success in social media as well. And so from there, we're really focused our R&D efforts, as well as obviously keeping that part of the business going, but looking into those adjacent markets. And so those R&D dollars are going to really be dependent on those growth aspects as well. So it won't be that exact match from a revenue standpoint, if that makes sense.
Okay, that helps. And maybe my follow-on question, primarily for Paul, is one of the struggles with Xperi's stock and the old Tessera was visibility into the revenue stream here. And obviously, I like the fact you're going to continue to communicate a baseline revenue stream here. But ultimately, that visibility seems to be an issue with a lot of investors. So are you taking any sort of new point of a new approach to communicating or giving visibility to this? Or do you see more of a benefit here of an expanded and diversified portfolio across both semis and media that will kind of average out those large licensing opportunities that's created, perceived risk from investors in the past?
Yeah, great question, Richard. I think the focus, for us and why we feel really good about the baseline revenue is that media part of the business. It really creates a substantial portion of that. And the pipeline opportunities are more diverse because of that. And then as semi continues to go into its next chapter there, we believe we can start building that up in a similar way that the media business has. And so that, as we look out and forecast, from a revenue standpoint, we are going to be focused on that annual, revenue baseline. And a large, what gives Keith and I confidence in that number more than anything else is our track record of renewals, right? So we do long-term deals, over 5 years on average, right? And we have an incredible track record of renewals. We're in excess of 90%, and we are, and that is just driven by our constant innovation, really, in that media space. And so when you talk about visibility and our confidence in that visibility, it really is driven by those factors. It's very different than just having a semi business where really at that time, Richard, we had 3 or 4 kind of big customers, right? And so the diversity of our customer base was not nearly what it is now. And so I think that gives us the ability to kind of continue to communicate in a way that provides confidence in that baseline revenue and growing that baseline revenue. And then we have opportunities beyond that as well. Keith, would you add anything to that?
I think those are all great points. I think one of the things that's really the beauty of our business is Paul talked about that we enter into long-term contracts. So that 375, in my mind, my perspective, is a recurring revenue model. So when we talk about visibility into the future, and we talked about the operating margins that we have, now keep in mind that operating margin was just based off of the $375 million baseline. So it's exciting because everything above that is really going to be incremental contribution to us as a company. Now, as our businesses grow, we'll add to that revenue baseline. Also in the semi side, one of the things that I talked about is just kind of working on the contract structures with our licensees where the economics are lined up. We see volatility, particularly when we sign the Micron deal, and you see a little bit of a peak. But ultimately, we think we can structure things in a way that is just much more consistent, and we're recognizing revenue that's going to be commensurate with the economics of the deal over time. So with that, it's very exciting. We have visibility more than most, quite frankly.
Thank you for your questions. Up next, we have a question from the audience. The audience is asking, how much weight is the metaverse being given in identifying growth opportunities, and where does VR fit into the mix?
Mark, you want to take this one?
Yeah, absolutely. Thank you for that. So metaverse is just one of the many areas that we're innovating in, but it is a very important area, to be perfectly honest, and it is a testament to the fact of the proliferation of video technology, which is bringing us our portfolio along in that regard, and it's an opportunity for us going forward for sure. With regard to augmented reality and virtual reality technology, again, we're already benefiting from that. We have a number of licenses in social media and imaging space that are applicable, and we see that continuing to move forward as well. And then more importantly, from an innovation engine perspective, we've built a strong team that are innovating readily in that space, and we look forward to benefit from those innovations in years to come.
Yeah, and I think I would just add, Mark, one of the things when we talk about that 10% portfolio growth, it's going to be focused in these areas and other emerging markets, right? Because this is what our team is so good at, is identifying those emerging markets and innovating in those spaces. Because that's what our inventors and engineers are there to do. That's their sole focus, right? Is to think about those ideas and invent in that space what's coming. So obviously metaverse is a big trend. We all hear about it. And we're excited about being able to invent in that space and help our customers down the line make their products better.
Thank you. Up next, we have on the phone Nicholas Zangler from Stephens with a question. Nicholas?
Yeah. Hey guys. The audience stole my metaverse question, but no. I've got two more if you don't mind.
Absolutely.
The first one, I'm curious. After the spin, is Xperi going to be a customer of Adeia? And if so, I'm just curious. What percentage of the revenues that would represent?
Yeah. Thanks, Nicholas, for that question. Yeah, Adeia. We've put into place agreements already, as part of the separation. We filed them as part of the Form 10, including a cross-business license agreement, where, broadly speaking, though, there's not like revenue coming in from the Xperi business. They're not a customer. We've already kind of taken care of that as part of the separation, and so there's a license agreement. There was a split of patents. There's a separation and distribution agreement. All of those things took into effect. How do we separate? And so there's not expected to be any sort of meaningful revenue coming from the Xperi product business.
Got it. And then just in general, Adeia has historically served linear TV and new media TV, and as the market continues to shift to CTV. If I were to think of this conversion as, a linear TV viewer effectively becomes a CTV viewer, does this transition represent a meaningful benefit for Adeia? So I guess said another way, is the CTV environment significantly more lucrative for you than the traditional linear TV environment?
Yeah, I'll let Mark expand on this, but certainly Adeia is focused on really, how do we play in that transition, right? And so our innovations have been thinking about, now it's a different market with different, ARPUs and the like, and so we have to take that into account. But certainly our innovations have been focused on that transition, and we've had success in licensing in that space as well. Consumer electronics, social media have all been part of our licensing efforts and success, and we expect to continue to expand in that area. Mark, would you add anything to that?
Yeah, I think that represents the connected TV space represents an opportunity for enhancements in our pricing models, and more importantly, creates an opportunity to bring in advertising-based revenues and such. And so again, I think there's an upside in that regard.
Thank you. We have another audience question. The audience is asking, can you elaborate on what you mean by rebuild of the semi business?
Yeah. Thank you. I know that in previous materials, we've referred to it as rebuilding the semiconductor business. However, to be honest with you, I do not think of it that way. I think of it as writing our next chapter. If you go back to the presentation materials that we gave, I told you that historically we focused on advanced packaging technology. But as we looked around the industry, we realized that the fundamental challenge out there was the Moore's Law issue, which is a very real issue. And if we wanted to continue to be relevant and provide value to our shareholders and to our customers, we had to address technologies that dealt with that issue, which is why we talk about hybrid bonding and advanced processing nodes. So from my perspective, it's about looking ahead to what's coming next, moving forward, and advancing the industry.
Thank you, Dana. Our next question is another audience question, and the audience is asking, what is the historical return on capital for acquired patents, and what is the expected timeline of new patents to become revenue generators?
Great question, Jill. Or from the audience. Thank you, audience, for your wonderful questions today. I think when we think about our portfolio and the way we license, we don't really break it up in terms of acquired patents and inorganic, or organic patents that we develop internally, because we license on a portfolio-wide basis. Now, do we, look for acquisitions that really can augment our portfolio? Absolutely, and we're really good at that. That's one of our core competencies. But 85% of our portfolio is developed internally, and we license that, the entire portfolio or the entire media portfolio or the entire semi portfolio to our customers. And so we really don't break it down in that, per patent by patent basis, because we're providing people with access to, 6,000 patent assets or, 2,700 patent assets on the semi side, right? Because we really license in that way, and that's how we think about it. In terms of, invention to monetization as well, one of the things that's really important to our licensees and our customer base is the fact that we continue to innovate, right? And so sometimes those early innovations are helpful in driving those discussions, because we're able to say, this is what we're focused on moving forward. This is how you'll be able to benefit from those early inventions as you take a long-term deal. As Keith mentioned, 5+ year deals, sometimes even longer. We're going to be innovating during that entire time period of that license agreement. And so we're able to have those conversations. And so certainly, if you're talking about the adoption cycle, right, on a patent and innovation, that can take time, right? That can, an idea to getting to a patent to then having it in the marketplace can sometimes take, upwards of 10 years, right? Or sometimes even longer. But our focus is on continuing to innovate in that space, because we think that's going to be valuable to our customers going forward, as we think about, what's important to them.
Thank you. Our next question comes from the audience. Can you discuss Canadian pay TV opportunities and how this will drive baseline revenue?
Sure. Canadian pay TV is one of the core areas that we've said is a growth potential for us. We currently have licensed a number of the Canadian pay TV operators, and we're really proud of that success. But we've also had to unfortunately litigate, against 3 of the operators that are out there. And litigation we always view as a last resort, but sometimes it's a necessary part of our business in terms of driving to get to an understanding between us and the other party of what the value of our portfolio is. And so, when you look at that opportunity out there for those unlicensed Canadian pay TV operators, we think it's tens of millions of dollars annually, over a period of time, right? And so, it'll take us some time to get there. It often does, but we still think the ultimate opportunity on a run rate basis is still very exciting for us.
Thank you. Our next question is also from the audience, and they are asking, what do you expect free cash flow to be in fiscal year 22 and fiscal year 23?
No, great question. Once again, you're picking up on the beauty of our business model in terms of the leverage. So, fundamentally, you're going to think about that we generate in terms of the guidance, the midpoint is about $437 million in revenue. I talked about being 65% kind of operating margins. And fundamentally, that yields in the mid to high twos in terms of cash from operations. We do expect a similar profile in 2023. We'll give a little bit more color on that. But it is those numbers that we're talking about on those revenues, it's just absolutely tremendous. So, with that ties back into our capital allocation strategy in terms of what we do with that. So investing organically to grow our R&D, paying down the debt. It gives us a sizable opportunity to do that and pay down the debt sooner than the maturity date. And then also return of capital to shareholders through dividends and repurchase of stock. But last but not least is we're acquisitive. So we are look to grow our portfolio, our revenue opportunities for seeking strategically smart opportunities that fit our business model.
Thank you, Keith. Our next question is also from the audience, and the audience is asking, how much time is left on your hybrid bonding and advanced processing node technology patents?
Thank you for that question. I think there's a couple points I'd like to make with regard to that question. The first has to do with the life of the patent portfolio itself. So for issued patents with hybrid bonding, our current assets extends well into the 2040s. For advanced processing nodes, they extend into the 2030s. But if you also go back to my presentation and look back at the slide on the patent applications, you will see that about 80% of our patent portfolio right now is directed towards those two technologies. So there's considerable life left in the portfolios. The second point I want to make here is we are more than patents, okay? We are also about know-how. People come to us and work with us because we help accelerate their technology roadmaps. If you think about hybrid bonding, for example, it may take 2, 3, 4, 5 years for them to actually adopt that technology and get it to work right. Many times we can cut that down into half that amount of time, okay? So it's a significant value proposition that we offer. So it's not about, so much, when you think about the value proposition, they gain, right? Because they enter the market faster, and they also save money on the R&D process.
Thank you. And our last question is coming from the analyst Hamid Khorsand from BWS Financial. Hamid?
Thank you. So my question was, could you just talk about your comfort level with your leverage ratio and, Wardy said it was acquisitive. So I guess, what are you looking at from a target standpoint? Would it be something small or would you do something large? And how would you, go about balancing that with, paying down debt?
No, great question. Paying down debt is really a big priority for us. So once again, the beauty and the leverage of our model is that we have significant cash flows. So that will be a priority. And once again, to pay it down sooner than the maturity date, as well as look for opportunities to refinance as the market conditions and pricing improves. In terms of M&A, there's a lot of opportunities out there. So we'll look for things that are big, small, whole companies and pieces of companies as well. It's just a matter of really what that fits into our overall narrative and our opportunity to either accelerate our roadmap or drive incremental revenue from our base.
Yeah.
Thank you. And now I'd like to ask Paul for any final closing comments.
Thank you, Jill. And on behalf of the entire management team, I want to thank all of you for your interest in Adeia today. It's been a pleasure being able to speak to all of you, and we look forward to updating you on our progress as we move forward. Thank you.
And that concludes our live question and answer session, and that concludes our presentation for the day. Please, as a reminder, feel free to visit the Investor Relations website to view a replay and download all of today's presentation materials. Thank you again.